All right, today we are diving into a topic that, let's be honest, everyone is curious about: passive income. The idea of making your money work for you. We're going to break down an absolutely brilliant guide on this from the finance channel Ditta and show you how it all works.
So let's just start with the biggest question, the one that changes everything. Seriously, take a second and think about this. What if your money actually worked for you instead of the other way around? That one little mental flip? Well, that's the whole promise we're going to dig into today.
Okay, so first up, the term passive income gets tossed around all the time, right? But what does it really actually mean? Let's get a super clear definition.
So here it is, in a nutshell. It's all about putting your money to work in things, assets like stocks or real estate, that then go on to generate more money automatically. And this is the magic part right here, with minimal daily effort. We're not talking about a side hustle or a second job, nope. This is about building a system.
And this right here, this is the fundamental mind shift you've got to make. See, most of us, we're stuck in the world of active income. We trade our time directly for money. An hour of work equals an hour of pay. Passive income just flips that whole equation on its head. Your assets, your investments, they're the ones doing the heavy lifting, making you money whether you're working, sleeping, or chilling on a beach somewhere. Okay, that's cool, but how does the money actually grow? Well, this is where the real magic happens. Let's talk about the engine that makes this whole thing go, the absolutely incredible power of compounding. I absolutely love this analogy from the Ditta Finance Guide. Just think about it like you're planting a tree. At first, right, it's just this tiny little sapling, and it feels like it's taking forever to grow. But you water it, you're patient, and over time, that tiny thing becomes this massive, strong tree, giving you shade, fruit, stability. Your investments, they're exactly like that. And check this out. This chart really shows you that tree growing visually. So look at year 1 compared to year 10. Okay, yeah, you can see some nice, noticeable growth there. But then look at the jump from year 10 to year 20. Whoa, it's not just bigger, it's exponentially bigger. That's because your earnings start earning their own money. It's not a straight line up, it's a curve that just gets steeper and steeper. That's the magic right there.
All right, so the idea makes sense, right? Compounding is awesome. We get it. But the million-dollar question is, where do you actually put your money to get this whole thing started? Let's break down 4 fantastic starter options for beginners. So we're going to quickly touch on 4 of the most common ways people get into this. And hey, don't feel like you have to become an expert overnight. The goal right now is just to get the basic vibe of each one.
First up, we've got dividend stocks. The concept here is actually super simple. You buy a tiny piece of a company, you become an owner, and as a little thank you for being an owner, the company sends you a share of its profits. It's literally like getting paid just for owning the stock. Next, you have bonds. Now think of these as kind of the opposite of stocks. Instead of being an owner, you're being a lender. You're loaning your money to a government or a big corporation. And in return, they pay you back with regular, predictable interest payments. It's a really solid, classic way to bring some stability into the mix. Okay, have you ever thought, man, I'd love to invest in real estate, but I really don't want to be a landlord? Well, that's exactly what REITs are for. A REIT, that's a real estate investment trust, lets you invest in a whole portfolio of properties and earn a cut of the rent money, all without fixing a single leaky faucet. You just buy a share and you're in. And last but not least, index funds. These are perfect for anyone who doesn't want the stress of trying to pick winning stocks. I like to think of it like this. Instead of betting on one horse to win the race, you're just betting on the race itself. You buy a single fund, and it holds a tiny slice of the entire market, like, say, the 500 biggest US companies. It's basically diversification in a box. Okay, the theory is great, but talk is cheap, right? How do you actually do this? This next part is your roadmap, your step-by-step action plan. Let's walk through the 5 key steps from the Ditta Finance Guide. And this roadmap it's brilliant. Okay, step 1, build your financial foundation. You can't build a skyscraper on a swamp, right? So pay off that nasty high-interest debt and build up an emergency fund. Step 2, choose your platform. Find a good, reputable brokerage with low fees. This is so important. Step 3, automate. Seriously, this is the secret sauce. Start small, I'm talking even $25 a month, and just set it to happen automatically. Step 4, diversify. We just covered this. You know the drill, don't put all your eggs in one basket. And step 5, maybe the most important one of all, reinvest all your returns. That is how you throw fuel on that compounding fire. So you can have the perfect plan, the best tools, but honestly, none of it matters without the right mindset. This next bit is absolutely crucial because investing is 90% a mental game. It's not a sprint, people, it is a marathon. All right, let's talk about the classic traps, the rookie mistakes that almost everyone is tempted to make. First, forget about get rich quick. It doesn't exist. Second, you gotta do your own research. And third, this is a big one, when the market takes a nosedive, and trust me, it will, that is not the time to freak out and sell everything. Your two best friends in this whole game are patience and consistency. That's it.
And I just love this final analogy from the guide. It sums up the whole journey so perfectly. Think of your passive income like a tiny snowball at the top of a really big hill. At first, as it starts rolling, it picks up just a little bit of snow. The results seem, well, kind of small. But as it keeps rolling, it gets bigger and bigger and faster until that momentum becomes this powerful, unstoppable force. So, we're going to leave you with the question that really matters most. What would you do with real financial freedom? Because at the end of the day, that's what this is all about. Now, this whole explainer was based on the incredible guide from Ditta Finance. Seriously, if this was helpful for you, do yourself a favor, go find their channel on YouTube, hit that subscribe button, give their video a like, and share it with a friend who needs to hear this stuff. Your journey can literally start today.